Gold is still proving why it has held power for thousands of years, and in 2026, it continues to stand out as one of the strongest assets in the global market. While stocks and crypto face volatility cycles, gold has stayed resilient, showing steady strength as investors look for stability in uncertain economic conditions. One of the biggest reasons gold remains strong is ongoing global demand. Central banks around the world are still buying gold at elevated levels, increasing their reserves as a hedge against inflation, currency fluctuations, and geopolitical tension. When institutions with trillions of dollars choose gold as a safe store of value, it sends a powerful signal to the market. Another factor driving gold's strength is interest rate uncertainty. Even when rates fluctuate, investors continue rotating into gold because it is viewed as a long-term wealth preserver rather than a short-term trade. This rotation trend shows that capital is shifting from risk assets into hard assets, and gold is leading that movement. Inflation also plays a major role. Even when inflation slows, it rarely disappears completely. Investors know that currencies can lose purchasing power over time, but gold historically maintains its value. That's why many portfolios now include gold not just as protection, but as a core position. Market sentiment is another key indicator. Analysts and institutional strategists continue to describe gold as a strong allocation choice, especially during periods of economic transition. When uncertainty rises, gold demand tends to rise with it. That pattern has repeated consistently across decades, and 2026 is no different. The rotation into gold is still active because smart money follows stability. Traders and investors who track macro trends understand that when global liquidity shifts, capital often moves into assets with intrinsic value. Gold fits that definition perfectly. It is tangible, limited in supply, and universally recognized. What makes this cycle especially notable is that gold's strength is not just defensive, it's also showing momentum. Price action has remained firm, dips have been bought quickly, and long-term charts still point upward. That combination of stability and strength is exactly what investors look for when positioning themselves for uncertain markets. Right now, gold isn't just surviving market cycles, it's leading them. The continued rotation into gold suggests confidence, not fear. Investors aren't running to gold because they're panicking. They're moving into it because they recognize value and long-term potential. The message is simple. In 2026, gold is still strong, still relevant, and still one of the smartest places to be when you want both protection and opportunity.